So let's begin with understanding the turnover in foreign exchange markets. Specifically, we start with understanding the turnover in currencies and currency pairs. According to the Bank for International Settlements, trading volumes have exploded from 1998 to 2016. The total daily volumes in the foreign exchange markets is close to $5 trillion per day. Markets are open 24 hours a day. Trading opens in Japan and Australia. Then it moves to Frankfurt, London, and Paris. These are the three active European markets, especially London. And then it moves to New York. Post New York, the market moves back to Sydney and Tokyo. So when the dealers in Australia are heading to work, New York is basically closing. The total trading in FX markets averaged 5.1 trillion a day. Spot transactions fell to 1.7 trillion a day from 2 trillion a day in 2013. The survey is taken every 3 years. The dollar remains the dominant vehicle currency on one side. 88% of all trades are done via the dollar. The euro, yen, and Australian dollar lost market share. The yuan became the most actively traded emerging market currency, overtaking the peso, Mexican peso. And the most active FX sales desks were in the 5 countries, the UK, US, Singapore, Hong Kong, and Japan. So from the survey, we can see that the US dollar is still the king of all currencies. 88% of all FX trades in the market had dollar on one side. The role of the euro in FX markets continues to decline since the beginning of the euro area sovereign debt crisis in 2010, down from 33% to 31%. The most active euro pairs are euro dollar, euro sterling, euro JPY, and euro CHF. Share of yen declined by 1% to 22% in April 2016. The Australian dollar lost share from 8.6% to 6.9%, and the CHF lost its share from 5.2% to 4.8%. In the emerging market currencies, the biggest currency pair gainers were the yuan, where the trading volume nearly doubled from $120 billion to $202 billion. The other emerging market currencies that gained market share were the Korean won, the rupee, and the Thai baht.